Hello and welcome to the webinar Investing in Real Estate, Mastering DSCR Loans. My name is Jed Barker. I'll be your presenter tonight. A little bit about me. I'm with Best Life Mortgage. I am a mortgage broker. I help my clients get financing on investment properties such as the DSCR loan. And I'm super happy that you're here tonight to learn more about the DSCR loan and how it can help you achieve your dreams or your goals of investing in real estate. I do have a mission to do that. I believe through that mission, I'm helping more people achieve financial freedom, which is a big part of one of my core values is freedom, helping families create that freedom in their lives through real estate investing. One thing I'd like to let you know right off the bat is after you do watch this meeting, if it's been helpful and you'd like to get more additional help free of charge, I am offering a free one-on-one strategy call where I could go through and talk more in detail about your specific loan scenario. We could look at numbers together. We could really calculate and crunch those together. We could actually go as far as helping you get pre-approved as well for a DSCR loan. So the link there on the screen that you see is your Calendly link. Go ahead and take that down. And then, book that call with me. You'll see what's available on the calendar. This webinar is absolutely for you if, number one, you're looking to finance an investment property without a traditional income verification. There's a lot of people who can't get approved for a traditional loan when it comes to investing. They just don't have enough traditional income to qualify. The DSCR loan overcomes that problem by taking traditional income completely out of the picture, and throwing it out. There's no income requirement from the personal side at all in a DSCR loan. So that is a huge win for those who may come up with that issue to invest in real estate. Number two, you want to have fewer barriers to expand your real estate portfolio. I have a lot of clients I've worked with who have quite a few properties, but they've gotten to a point where they can't finance those properties anymore using conventional financing. It just doesn't work any longer for them. The DSCR is a wonderful thing to pick up now for them and start financing loans using that as opposed to traditional Fannie Mae, Freddie Mac conventional financing. Number three, you're focused on building passive income through real estate. A lot of people are here tonight because they want to really start building passive income, creating investment opportunities for themselves. And this is a wonderful loan to do that. Number four, you want to streamline the process of paperwork through the loan process and make it easier. The DSCR loan is a fairly uncomplicated loan for you to really get approved. And I will go in tonight and show you exactly how you could get approved for the DSCR loan and make sure you understand what it is. And again, after this webinar is over tonight, if you'd like to schedule a one-on-one where we could really strategize together, crunch some real numbers together that are specific to you, please use the link in Calendly to go ahead and get that set up. All right. So what is a DSCR loan? That's the first question we should really answer today is what is it? It stands for debt service coverage ratio. So DSCR loan characteristics, we'll go over those. There's no need for traditional income verification. You don't need to supply a W-2, a 1099, a tax return. The applying and getting approved for a DSCR loan has nothing to do with your personal income in your life. Okay. It has nothing to do with that. It has more to do with the income from the property, which is what we will talk about on the next slide. It's a very streamlined qualification process. Really for the income side of it, it's the income of the rental property that's important, not yours. It makes it a lot easier as long as you have a good deal that can cash flow or at least hit net positive or balanced returns. You're going to have a really good shot here at getting a DSCR loan for your property. It's great for building property portfolios. Like I said, a lot of people cap out on traditional financing. They need to have another source. DSCR loan, wonderful source for that. Perfect for investors who do not have traditional income, such as business owners, gig people that just don't have high enough income to buy as many properties as they like. Wonderful for those people. So let's take a look at this calculating your DSCR ratio. We're going to show an example of how to calculate this so you really understand what DSCR means. But before I do that, let's look at what DSCR means on the left-hand side of the page. DSCR equals property's net operating income divided by the debt obligation. So the first part, the net operating income, that's the rents received on the property, the total rents received for that house, let's say, divided by the debt obligation, which is the mortgage payment, taxes, and insurance. So it's taking what you can receive in rent, dividing it by your payment, and you get a ratio now with that number. Number two, on the check side down below here, down payment and reserves. I do want to let you know that one of the requirements of this loan doesn't have an income qualification on your side, but it does have a down payment and reserve qualification. Typically, it's 20% down, sort of a starting point, and 3 months reserves. That's 3 months of your mortgage payment left in reserves after all expenses. And it does have a credit score requirement. I mean, to get approved for this loan, you don't have to have the income side of it, but you do have to have the credit score side of it. Typically, it's about a 660. And if you're there already, that's awesome. The higher score, the better. One thing that I can definitely do as a mortgage professional, as your loan advisor, is I can help you with the credit side as well. So if it's a little lower, we can help boost it up. If it's already high, but we could get it higher, we could show you how you could do that. And I could definitely do that in one of our strategy calls that we could book together. So let's now look at the right side of the screen. This is calculating your DSCR ratio. So we're going to take an example of a $300,000 single family home. That's a 20% down payment, so that's $60,000. The mortgage on that property with today's rates would be about $1,803. So that's the mortgage payment. We call that the principal and interest. One thing to note, sometimes if you want to on a DSCR loan, you could use an interest only calculator and interest only payment. So that would be reduced a little bit, maybe down to about 1,700. Now let's take a look at the taxes. The estimated taxes are 233 on this property. It's just estimation, general estimate for insurance, $112 a month. So total estimated PITI is 2148. So now what you want to do is you want to say, hey, if my mortgage payment is going to be 2148, what do I need the rents received payment or rents received to be in order to get approved for this loan? Well, DSCR payments, they usually want to see a 1-to-1 ratio. So if your rents received are going to be $2,300, they don't want your mortgage payment with PITI to exceed $2,300, right? In this example, we take the $2,300 divided by the payment. It comes out to 1.07%. Now, I know on the screen it says 1.7, but it's actually 1.07. And that is a very fine DSCR ratio. It's just over 1%. 1-to-1 is a really great ratio. Anything higher than that is great. Anything lower than that isn't as good, but you could still get a DSCR loan, even if it's lower than 1-to-1, depending on the loan program and the product you want to use. Let's go ahead and move on to the next page here. How do you maximize your DSCR loan approval? How do you make sure you'll get approved for it? Well, you want to make sure you're choosing a property that makes sense. And so this isn't a primary home that you're going out and, getting all emotional about per se, about, this is exactly what I've always wanted and where my family wants to live and all that. I mean, you're doing an investment property. So you're looking at the investment side. You're focused way more on the number side of it. So you need to choose a property that will have a good potential for rent, because you want the rent to exceed your payment. That would be the best, so you can have some cash flow. But for the loan purposes, we want it to at least meet the payment, right? That's the 1-to-1 DSCR ratio. We need to make sure you meet the required down payment and reserve requirements. Just because the property itself will cash flow doesn't mean you're going to get approved for the loan unless you have met the reserve and the down payment. So having the ability to make that down payment in the reserves, you need to have that if you're going to get approved. Now, you can have partners if you don't have the money. You can save up the money. There's a lot of different ways maybe you can get the money, but the money is important on this loan product, okay? Number 3, maintain and increase your credit rating. Like I said, if you have the minimum credit rating, you'll get approved, but a higher the credit score, the lower the interest rate. The lower the interest rate, the lower the payment, the more cash flow for you, the better the loan. That's one thing I can definitely go over in a one-on-one meeting with you, is how to increase your credit score so you can have, just the best loan program possible for you, so that you can have the best outcome in your investment. Number 3, this one's sort of a silver bullet. A lot of people don't know this, but you could use what we call an AirDNA calculation for DSCR ratios. If the regular 12-month term DSCR ratio isn't working, you can't use that with every lender, but we do have a really specific program that would allow us to use Airbnb rental income to meet our DSCR ratios without any change to the loan terms. That's a big win. So if you've been struggling and you're watching this, getting approved for some DSCR loans that you'd want to because the ratio is not working, you could work with us, me really specifically as a mortgage broker. We can use Airbnb estimates to do that. We can do that on purchases. All right. Let's look at a few common misconceptions when it comes to DSCR loans. Here's one that a lot of people think. They think that DSCR loans are only for experienced investors. You can't get them if you're brand new. You've never done, an investment home before. It's really not going to get approved for it. That is absolutely a myth. That's a misconception. The reality is DSCR loans can be set up for brand new investors, never bought an investment property before, or very experienced investors as well. So both are totally fine. Here's another one. Only big properties qualify. I think this one, it happens as a myth or a misconception, probably more, is that DSCR loans or debt service loans, they are used for big properties. They're used for real estate, commercial properties, apartment buildings, malls, everything like that. They use this type of loan. But the reality is small properties, single family homes, duplex, triplex, quads, they can use the DSCR program as well, just as easy and just as well as those big properties. And so you don't have to be buying a multiplex. You could buy a single family home, start there, and get this done. Let's look at a case study together, another one, so you can really grasp the DSCR ratio, because the ratio part of this is one of the biggest parts of getting this qualified. So right now, let's look at the duplex. It's $450,000. Okay, so that's a duplex. It's two sides. It's a multifamily. The mortgage payment on that duplex, and with today's rates, about $2,700. Estimated taxes at 541. Estimated insurance at 125. A total PITI payment now of 3307. And so now what we need is we need the rents to at least cover the mortgage payment. So in my example, the rents are 3400 for the two sides, and we divide that by 3307. Now we're getting a DSCR ratio of 1.02%. Does 1.02% work? Yes, it works, and it works quite well. It'll give you great pricing. It'll allow you to qualify for that house. Now, if that house came out to be more than $3,400 a month for PITI, like I said, you could still qualify, but not with such great pricing, maybe a higher interest rate. Although, if you put more money down or maybe go interest only on your loan, now you could be back into that 1-to-1 ratio, which give you better pricing and a better loan terms. Now, what's the cash required on a $450,000 duplex? Down payment, $90,000 minimum. Reserves, 10,000, 110 with that's 3 months typically of your mortgage payment. Reserves aren't always required. Sometimes you don't need them depending on your credit score and your experience. Estimated closing costs. These are things that you'll have to pay at closing in addition to down payment, estimated about 15,500. So if you're going to buy a $450,000 duplex on a DSCR loan, chances are you'll need about $115,610 as an estimate in order to get into that. Okay, so I hope that case study has been helpful. You're starting to understand more about how to get approved for that DSCR loan. And I hope you feel more prepared in your journey of investing in real estate now that you've seen there's a loan you can use that you don't have to even bring your income into it. We can just qualify you based on the DSCR or the ratio of the debt service coverage of the loan. I'm an educator. I'm not a salesperson. The phone call that you can have with me is a one-on-one strategy session. I'm not here to sell you on doing a loan, buying a house. I'm really here to answer your questions and to go down that road with you so that you can get clarity and I can help you basically determine what's the best move for you on the lending side. So you could book a strategy call with me. You could see it on the bottom of the page there. That is the link. If you're watching this on YouTube or another social media channel, I'll put that link in the description of the video so you can look for it there so you don't have to write this down. But I do appreciate you being here today. It's been super fun. I hope you've enjoyed this. If you have, please give me a thumbs up. Maybe share this video, subscribe to my channel. But hey, God bless. We'll talk to you soon. Bye-bye.